Hi, everyone. We're going to talk about growing your startup today and some strategies for both small and later stage cybersecurity startups that might help you grow. I wanted to start out with having each of our panelists talk a little bit about how you work with cybersecurity startups and the work that you do. So Mike, can you kick us off?
Sure. Hi everyone, I'm Mike Alyson. I'm Senior Vice President with Gregory FCA. We're a public relations firm located in Ardmore, just outside of Philadelphia. So I've been in the PR industry for about 20 years, so I've had an opportunity to work with a lot of companies in the cybersecurity space. Back when identity theft was the bigger issue, now it's more around hacks and breaches and things like that. But we help them tell stories, we help them raise awareness, we help them create content. We can be training wheels on social media, we can run communities, but for the most part we help them just establish their voice and find audiences.
Great. Alyson?
Hi everybody, Alyson Reyes. I'm with 1843 Capital. We are a Series A, Series B, so early stage venture capital firm. We have an emphasis in cybersecurity, but we aren't a cyber-only fund. Broadly, we are in enterprise technology. We've just gotten off the ground in that we're about a year in, so we've got 4 companies in our portfolio, one of which is a cyber firm. And that partly comes from my background, which is I spent about 23 years as an operator across 5 startups, 2 of which were in the cybersecurity arena, principally in security information and event management. For those of you who are local to New York Metro, I ran a company called Vigilant, which delivered specialized services principally to a lot of big banks here, and we sold that to Deloitte in 2013. So that's a little bit about how we look at the space.
Great, thanks. Richard?
Hi, everyone. Richard Sewell, founder and managing partner of Evolution Equity Partners. We're a growth venture capital investor focused on A, B, C series deals. We also invest earlier, so there's a pocket of money that would do early stage deals and then later stage deals post the ABC round. Our backgrounds as a team really go back to investing in and running a company called AVG Technologies, which was an antivirus software provider that we bought, invested in, and then ultimately took public on the New York Stock Exchange. So it's a team of 5 partners based in Silicon Valley, New York, and Zurich, Switzerland.
Great. And Tom?
Well, good afternoon. Tom Weithman. I'm badged as Mach 37, but to tell the story of Mach 37 is to back up a little bit and talk about the mothership, CIT Gap Funds, a fund that was formed and underwritten by the Commonwealth of Virginia in partnership with a nonprofit, the Center for Innovative Technology. We started that about 15 years ago and did a lot of enterprise software. That's the background of the team. And within that subset did a lot of cybersecurity. About 5 years ago, I and a few other people formed Mach 37, a Techstars sort of model accelerator in the Washington area focused on cybersecurity startups. Between these couple of funds, we've invested in, I think, 75 plus cybersecurity companies. So that broad exposure, and we're coming at it from the standpoint of a seed investor, a seed and early stage investor. So our typical bite size through Mach 37 has been about 50K. Through the Gap Fund, or the mothership as I call it, done about another 20 investments at 100,000, capping out at 500,000 into these companies. So that's the standpoint that we're coming at it from, an investor, and hopefully a value-add investor in very early stage, newly formed cyber companies.
Great. So I wanted to start out by talking about companies that are in the really early stages. So maybe, Tom, you can kick us off with this. What do you look for, and what would your advice be for a cybersecurity startup trying to set out and raise a seed round of funding?
Absolutely, thank you. And I'm not sure it would differ between cybersecurity and some of the basic things we look for. I would counsel companies in other sectors. I mean, we look for deep familiarity, domain expertise, deep familiarity with a problem. And I think it was said earlier by one of the speakers that the narrative is important. We like to know that someone has lived with a problem and experienced a problem, and nothing is more compelling than someone who has done so, either within the enterprise to whom they seek to sell or from a consultative capacity. So we seek deep domain expertise. I would say in addition to that, are the best, at the seed stage, the best performing companies in which we have invested have had balanced teams. And by that I mean someone that can balance, has deep technical know-how, but also has the business chops somewhere in the constellation of that founding team to advance the company to the next level. Those are primarily the things we look for: a real problem that can be validated, hopefully has been validated by the founders, and a balanced founding team.
And how do you gauge whether that problem that a company has identified will resonate with a broader customer base?
Well, so we look for evidence of customer traction at every stage of investment. I think all investors do. What constitutes customer traction just varies as the company grows and matures. If we're looking at something that is really back of the napkin, hopefully someone can, a founder, if they have lived the problem, as I think of it, can bring real-world representation, their own experience that's credible and referenceable from their past employment situation or consulting situation. Barring that, if someone hasn't lived this specific problem and has access to that specific customer set, we're lean adherents. We want to see evidence of customer calls. We want to see evidence that there is receptivity in the marketplace to that solution. You take it a little bit further, and then you want to see betas, you want to see paid betas, you want to see paid installs. But generally, where we're playing, we want to see something at the MVP stage that has been validated and evidence can be presented of customer interaction that bears that out.
Sure. And Richard, how about for a company that's a bit further along in its fundraising, that might be raising a Series A or beyond? What are the traits that you would look for in those kinds of investments?
Yeah, thank you. So, talking about B's and C's, because I think with A's it becomes very similar to what was just said in terms of product market fit and making sure that the narrative team, customer traction is in place. So you want it further down the line. But as you move into the B's and C round, you're starting to look at unit economics. And sure, all the other things that were indicated are important. So team, technology, narrative, marketing and sales. But at that point, you're starting to look at unit economics that essentially qualify everything that has been done before. So the whole thesis, the vision, the ability to execute starts to play out as you get into that B and C round. And there, it's just looking at a quality of team, execution, being able to deliver on the thesis with a big runway for growth ahead of it. So I think, when we look at our space, sort of two broad categories when you're looking at sort of A, B's, and C's in terms of types of companies that are there. You see a lot of companies kind of in sort of the replatforming of the cybersecurity space, the next generation SIEMs, next generation endpoint, next generation firewall, next generation. And then another set of companies that are truly defining their own space in terms of building their own spend bucket, where there's blue sky and exponential growth opportunity and obviously attractive return. So, that's where we kind of like to play, where that exponential return can be had. Having said that, the next generation space also has opportunity given the right team, technology, and platform.
Sure. Alyson, anything you would add on that front that you would look for in a later fundraising stage for a company?
Yeah, I think a lot of what Richard mentioned resonates with the caveat that I would say, and I suspect you do this too, right? If our entry point being at Series A, we do look for established unit economics really early on. We tend to identify Series A as being right around probably a couple $1 million a year with a nice healthy growth rate. And then, of course, it's all the other things we start to take a look at in terms of the target addressable market and is this the right team to execute. But we feel like if we can get those pieces in place and we know that they've got strong customer referenceability at that stage, then it's truly about putting in place the right mechanisms for them to actually execute and scale the vision. But we will, through diligence process, take a pretty deep look at the financials and make sure that we're on the right side of the gross margin analysis so that we feel like as this thing scales, it does have a path to profitability. So that may be an East Coast thing a little bit, I'm not sure, but we absolutely are trying to make sure the investments we're making are going to be in companies that ultimately do have a strong path to profitability, not the long term of we'll just keep taking venture money and pass it off to the next guy.
Makes sense, which we see a lot too in many fields. I want to talk a little bit about marketing too. So Mike, what would you say are some of the key marketing strategies, especially for a cybersecurity company to employ in its early stages of growth?
Yeah, I mean, there are many, but once these folks have invested in these companies, at some point they're going to need to think about marketing. And I'll talk about just 4 specific things today: audience, data, relationships, and the news cycle. So these are things you need to develop strategies around, these 4 things, in my opinion. It's all about storytelling. when you're identifying, who your audience is, you then have to understand, where are they? Where are they online? What do they read? What do they share? What are they interested in? And look at every interaction as a potential story. I mean, the folks here today, you've met prospects, you meet customers, you go to trade shows. Every one of those could potentially be a story. So when you're doing that, then you're getting that market out to your audience. With data, as the previous panel discussed a lot, data informs everything today, and more so in marketing and PR than it ever has. We don't make very many decisions without first looking at data. We can see if a story's trending, how long it might trend for, when we could potentially get an expert speaking to a reporter such as yourself or others to help them do their job. So data informs everything. Surveys, I mean, the market's saturated with surveys. So you have to think of what would be a solid set or number. How many people should I survey to really determine this thing to be statistically relevant? In my opinion, would be upwards of 900 to 1,000 people. You need to really survey a lot of people to get a good understanding of what's happening in the market. When it comes to relationships, that's the business I'm in. I develop relationships with reporters. Some I've had for 15, 20 years, some I make every single day. But it's really about understanding how I can help that reporter do their job. I don't go in specifically trying to pitch a company and tell them about that. It's the same thing when you network and you go in a room. You don't walk in a room and just say, let me tell you about myself. You want to go in and you want to introduce some topics and how can I help you do your job and what are you working on today? And finally, the news cycle. You really have to understand the news cycle, where things are going. I mean, just this week, 4 major stories in cybersecurity, from the WhatsApp story to Intel to others. So you really have to understand, is this the time I should be able to, I could put something out there and people would understand it, or should I wait for a better time?
And on the data front there, where do you start collecting data that would be relevant to a company you're working with?
I mean, it's the smallest thing sometimes. It might be, if you're looking at specific publications, how big is the reach of the publication? And then after that, how far do their stories spread on social media afterwards? So some stories spread better than others, and we'll study that. I mean, there might be a story in the New York Times that only is shared 50 times, but there could be something that appears in TechCrunch that would clear thousands around the world. It's the topic, it's the timing, it's taking all that into consideration. But everything we do is informed by data today.
Sure. Yeah. Alyson, you hear so many pitches. I'm sure some of them start to sound the same. As far as marketing goes, how would you say that a company can differentiate itself, or what are some good strategies around that?
Yeah, I think ultimately the marketing really stems from the raison d'etre for the company, right? So it really starts for us with, again, going back to that client relationship. Your company exists for a specific reason. It exists typically to solve some kind of problem that you feel like isn't being addressed adequately in the market. And so, that story can't be better told than with a successful customer base. So, when you're in early stage and you're really starting to get off the ground and you're moving from seed to A or what have you, right? The reality is you don't really have an established brand, right? You have a building reputation. And so what you're looking to do is, by making sure that your customers are as successful as possible, right, you're building your brand by extension. Because oftentimes, as we saw earlier, most of the companies growing up in cybersecurity are focused on companies that are much larger than they are, right? They're not looking at the SMB space as much, they're looking at the Fortune or Global 1000, right? And if that's the case, you've got an opportunity to build the reputation of your business with one fantastic client, right? And you can market the heck out of that afterwards. But so, I've been part personally of both venture-backed and part of self-funded startups. So it wasn't about us spending a ton of money on marketing per se, but it was very much about making sure that we did the job that we were supposed to, we solved the problem we were supposed to, and then being able to actually leverage that to build our reputation and then subsequently our brand.
So you have to build the product and make it really valuable before you can layer on a bunch of marketing on top.
Yeah.
And Richard,
I wouldn't have anything to market.
Richard, are there any hackneyed or overused branding ploys that you encounter as an investor?
Yeah, to Alyson's point, look, I think the biggest risk for an early stage company is to not link that strategy to the marketing. And you see that a lot. Companies that claim to have AI and ML and market themselves heavily there, And I think, using the analogy that Warren Buffett has, when the tide goes out, we'll see who's swimming without their trunks. I think there's a time coming soon with artificial intelligence and machine learning as the adversary starts to utilize AI, ML effectively, and they are. But you'll see more and more cybersecurity companies go by the wayside because that truly, that link is not there between their technology and actually the marketing platform. So I think that's overused in some cases. There are certainly platforms and companies that utilize that technology and are being true to their customer and the market as to what it is, and they should call it what it is, AI and ML. There are others who not.
Yeah. And Tom, so what are some of the pitfalls that early cybersecurity companies might face in devoting resources to research and development while they're trying to juggle marketing and everything else?
Sure, happy to do it. First, I want to go back to this. Every year about April Fool's Day, I just get this itch to develop a business plan with every hackneyed, overused phrase in it, compose it, and shop it around the next level of investors just to see who will follow it. And I've never done that. It seems like too much work, but I think that would be an awful lot of fun to do.
Crutchbase did.
Ultimately, you differentiate, or you seem to differentiate by being differentiated, and that I think is often overlooked. So in terms of pursuing R&D funding, this is something that we've got a bit of experience with. We've been fairly effective as we are a seed investor and subject to the slings and arrows of round after round of downstream dilution. We want to build as much value in the company on a non-dilutive basis as we can early days. So we've gotten pretty adept at leveraging non-dilutive funds from R&D programs available to the federal government, things like TTR, SBIR, various BAA activity that we see out there, grants and contracts. We rarely source companies through that deal flow stream, but we do leverage, and we've been pretty effective at leveraging those sorts of funds. And they are non-dilutive in one sense. The thing that you have to be aware of as entrepreneurs, they can be quite dilutive in another. They can be dilutive of your time and energy if they bring scope and mission creep to the enterprise. If you consider sources of funding like that, you've got to make sure that they are dead on with where you want to take the company. It's the company's mission and the founder's vision and their apprehension of the market that should guide the company, not a non-dilutive funding source. So that's what I see as the biggest single pitfall in pursuing R&D funds, is getting sidetracked. Apart from that, love to see a good customer development partnership, or maybe you're in on a consultative basis, doing work that is accretive to product development while learning more about the customer and satisfying a real customer need. That to me is hugely useful. To chase after funds for other purposes, I think, can be a fool's errand.
Does the market environment matter at all, do you think, in terms of how much money a company should be devoting to its R&D?
Does the market environment?
Yeah, more broadly. For example, if you're expecting a downturn.
Well, I hadn't thought of it in terms of a downturn, so I'm going to pass that along to somebody else. But I think that you got to make sure that any development undertaken is aligned with real market need. Otherwise, you're in a technology push situation, and we see that happening with some frequency, especially with highly technical entrepreneurs. If you don't have, again, the balance on the team, sometimes you can go out and develop a lot of interesting things. You can build an IP fortress that doesn't mean anything too. You want to make sure that what you do, the expenditure of funds in terms of product development, is aligned with a real customer need.
Yeah. Alyson or Richard, anything to add to that on how companies might balance R&D with all these competing, spending?
Well, to the point on the cycle, maybe I'll pick that up. Yeah. Look, in terms of R&D and the cycle, the companies out there that are generating attractive customer portfolios today and delivering products that truly add value are still going to be doing that in a down cycle, particularly in the cybersecurity space. So cutting down R&D, particularly when it gets tough, when the adversary starts to get aggressive, when things get tough in the economy, is exactly when the adversary comes in and starts doubling down. You're still going to be able to sell product in that environment if you're best of breed if you're able to continue relationship with your customer, and that's well understood in the market. So I would say it depends on the situation. Certainly, if you're an early stage company and that traction is not there, and the market slows down, and that, well, there's some measured balance there that should be had on how you look at R&D and marketing and sales and a lot of the spend buckets.
Sure.
I think we're fortunate as investors right now that cybersecurity is still very much an inevitability, right? We all know that this is a growing sector overall globally, and so we've got the rising tide lifting all boats, if you will. Going to specific organizations and thinking about self-funded versus venture-backed, though, and survivability and investments in R&D, I've lived that piece. And I've been part of companies that were delivering services and developing product and taking the profits off of the services to self-fund the development of R&D. When you do that, you do have to be very cautious about how you actually go about that process. It's a slower development process. You don't have somebody's outside capital, but you're also not diluting yourself. A great story on that front is a friend and old colleague of mine, this guy named Matt Calkins. He's the founder and CEO of Appian. Appian's like a 20-year-old company at this point. They got started delivering services to the federal government, building BPM portals and things like that, and now they're a multi-billion market cap publicly traded company that took money very late. Right after they'd gotten themselves off the ground, they were cash flow positive, and they took it later in the cycle when they felt like they really wanted to heavily invest in R&D and transition over to a low code player that they are today.
Yeah. And Mike, how would you say that a new cybersecurity company might balance out the time and resources it takes to do the rest of its job with marketing and doing adequate marketing and getting their message out there?
I mean, it's all about sales. PR is about sales. Marketing is about sales. It all has to come back and tie to sales in some way. In the past, PR was very difficult to tie directly to sales. You assume someone read a story, you think they may have come, and called you because of that. Now there's a lot of data. There are a lot of breadcrumbs. There are analytics out there everywhere. If I were to earn a story for, a client in Bloomberg, and we could see in the web analytics that people came from Bloomberg over to the site to seek out more information, that's a win. So I'm looking for those types of examples, like that, it would hit the right audience, and those folks came and they thought so much about that article or that reference or that quote by that expert to seek out more information. So it's always going to be a balance. I mean, it's sometimes, and it depends on what stage you're at. I mean, we work with startups, we work with billion-dollar companies. But you can take best practices from billion-dollar companies and you can apply them to startups. I mean, the budgets might not be the same, but you can do a lot of very similar activities and reach audiences in a very similar way. Content, we see a lot more effort being put into content, whether it's written or video, and our guy Carl's here in the front row, he's doing content. We're doing content all the time as well. So we eat our own dog food. We blog, we try to show best practices that way as well. But we look for stories. The customer story is very important and the most difficult for us, difficult one for us to get. Customers don't like talking about cybersecurity. They don't like to talk about things that went wrong. But maybe a year later, there may be an opportunity after everything's settled down to kind of look at that story or that incident, and what was done to, or maybe being done to prevent that from happening again. So,
are there any strategies you use to draw those stories out of people?
I mean, every interaction is an opportunity. So I would encourage, companies, startups, whatever phase, but invite your marketing people to your strategy meetings. Invite them to R&D. Let them see the product. Let them document the journey. From your startup, from the first day you thought of the idea to wherever it goes, that's a story. And you can communicate that and people can learn from that as well. So always be documenting, even, it's interesting, on the engineering side and when we work with people a little bit more on the technical side, it's just very ordinary for them. It's their everyday. But we're very in tune to hear what makes for a good story. And it's just listening, being a really good listener.
And do you have any that come to mind recently that really sparked your interest?
Well, we had a client in, and he's a security consultant, and we were just having conversations about ransomware and the cities and how it's impacting municipalities. And, just because of that conversation, I was able to introduce him to an Associated Press reporter, and that just happened this week where that person was quoted in. So it's always, ransomware is a front page story this week. You always have to be aware of a cybersecurity story will be a front page story tomorrow somewhere. It's every day, it's a front page story. So understanding the news cycle, having good relationships with people, knowing when you can go to them. My philosophy is always the right story at the right time to the right reporter. If you can put those three elements together, you'll have some success.
And one thing that seems important is to keep your own sense of, to keep your finger on the pulse of what where industry trends are going, and to keep educating yourself. I wonder if maybe, Alyson, how do you stay on top of where the winds are blowing, and what sources do you use, or data sources do you use to stay on top of what's kind of old news and what's new and exciting?
So in this chair, as an investor or?
As an investor.
Right. So we at 1843 we tend to spend a lot of our time doing first-person research. But so, as everyone who's been in a venture chair knows at this juncture, like, you do just get flooded with inbound. And some of that is going to marry up really nicely with what you're trying to accomplish and what you see as opportunity, and some of it simply won't. But the best way, the most refreshing part, honestly, for me, having moved over from the founder chair to investment, is it feels very luxurious to be able to sit and think about where there's that new opportunity in what buckets across cybersecurity. And that's been, honestly, just personally very satisfying and sparks intellectual creativity. But so, what we're looking for is that top-down first-person research analysis married up with what we're hearing consistently from a lot of the CISOs that we're in touch with, and then obviously trying to match that with the bottom-up analysis to say, okay, what companies exist out there, and can we find that sort of perfect trifecta?
Is that true for you too, Richard?
Yeah, similar approach, top-down, bottom-up. I think with us, we have a CISO advisory board that we call upon regularly in terms of just feedback loop, in terms of what they're seeing, pain points, and that's a nice extra set of data and information from the market. They're at the front lines making buying decisions, have those pain points. But the internal analysis, a good number of technologists on the team who have their own views. We pursue those opportunities sometimes internally by seeding them internally and building a company outwards, and that's based on their research, their views on the market, collaborating with CISOs as well, and the overall view on that market globally. And I think that view globally, Europe and the United States, gives us a little bit of different perspective in terms of what's going on in other markets, how that relates to the U.S. Some of the demands that customers have of vendors overseas tend to be a little bit different sometimes than what happens in the U.S.
And Tom, how about you? How do you stay on top of what's new and different, and what kind of is old news?
So I'd like to say I'm fully on top, but I'm not. The one advantage that we find that we have that we find helpful is we've got an active portfolio of about 150 companies. So we talk to our portfolio, maybe in the course of simply the day-to-day working with them, board meetings, informal interactions. They're talking to customers. We talk to customers as we diligence companies. We see new business plans. But I think we have a singular advantage in having a large portfolio. We use that as a reference point in our diligence.
So you can help. So your companies can help you vet what's actually new and different. Yeah. I want to pause here for audience questions. If anyone has anything they'd like to ask our panelists. Sure. We've got a microphone, so just one sec.
While she's coming, for the people who actually are running early stage startups, one other thing I wanted to mention on the customer front as well, and sort of the free marketing, if you will, I found really useful to create a customer advisory board super early on. It's an easy way to make sure that you're in touch with your most important clients and to turn them into advocates for your organization. And then also to give them an avenue to speak to one another. And a lot of times you're going to find that you're going to be able to surface a lot of potential challenges that you might not have known otherwise.
That's a great idea.
A question for Mike on reaching the CISO and cutting through the noise. and you talked about trying to find what people are reading, what are they sharing. Are there any specific channels that you're finding to be effective for getting through in terms of PR to the CISO?
I mean, it's become much more of a business conversation. So I think we're seeing, Bloomberg, the Wall Street Journal, like the publications that a CEO, a CISO, would read, because that's where those are the folks that are now responsible ultimately for cybersecurity if something were to go wrong at the C-level. So I think a lot of the business publications now are devoting a lot of coverage and editorial to the space. It's a concern for shareholders, it's a concern for investors, it's a concern for customers. So those publications, I would say, if you're looking for specific names of publications or just different sort of channels, I mean, Twitter is a great publication. I mean, I spend a lot of time on there. I follow a lot of reporters to see where their interests may be. Reporters, believe it or not, use Twitter directly. They'll reach out to entrepreneurs directly with a question that they may be trying to write a story about. So you can create certain search strings on Twitter to sort of early warning system to see where the interest lies. I read everything. I mean, that's my job. I'm paid to read and try to get folks in the newspaper or on the publication or on television. So I read mostly business publications. On the technical side, The Verge, MIT Technology Review, VentureBeat. I think these are also publications that folks in the investor community are looking at as well.
Other questions?
Sean Drake with Stony Lonesome Group. We're an early stage seed investor, but I'd love to get some perspective from some of the B round and later investors on the panel in terms of your expectation when you come in and make that $20, $30, $50 million B round or C round investment. What type of multiple and exit are you looking for to make that work for your portfolio? Some of us, I tell our portfolio companies, if they keep drinking their milk, maybe someday they'll get a chance to meet an 1843 or an Evolution Equity Partners for those follow-on rounds. But what are you looking to do after you come in with that size of a round?
That's on you, my friend.
Yeah, there the answer is we're looking to make attractive risk-adjusted returns. And that risk-adjusted return is defined by the quality of the company, the opportunity, the team, the technology, and that could be a 10x, could be a 3x. It depends on the opportunity, the segment, TAM, all the things that you look at. I think look at that Series B and Series C, going back to the unit economics, need to be solid, corporate governance solid, the reference calls with customers in place, most of the C-level team in place. I think today it's a competitive environment for Series B and Series C. So the more you can have lined up for an investor to look at, the more of those ratios that are in line with or exceeding what people expect, you're going to do well. So lots of money out there chasing it. So that if you do it well, you're going to get an investor that is going to view that as an attractive risk-adjusted return.
Putting it in perspective, the latest metrics, I think, from last year's data are something like average exit in technology is somewhere around 200 million. But if you actually look at the median and not the average, because it gets skewed by the mega deals, right? The median exit is closer to like 55 or 60 million, right? And the vast majority of exits these days are M&A. So, for us, looking at it as an entry point, thinking about A and then subsequently B, we still are looking for valuations, hopefully that are sitting in that sort of 15, maybe it's 20 million on a pre-money, because then we know we could still generate a 3x return even at the median, right? That's a fairly conservative way of looking at venture, but it gives us a level of comfort that hopefully with an A company that's got established revenues, that has decent gross margins, that looks like they've got a team that can execute, and we know that there's a pathway to still hit what could be, a top decile performing fund, with a 3x return, and you're just hitting a median exit price. So we look for some of those, and then we obviously look for ones where we might get a 10 or 20 or higher, right? Every fund is going to generate its own, methodologies around fund composition. we tend to tell people that we're not going to be swinging for the fences on every deal in our portfolio, right? We're actually trying to risk adjust, eliminate the losses by looking more conservatively at some of those players.
That makes sense.
And by the way, sometimes you get surprised. So the ones that,
You didn't expect.
you underwrite a 3X end up turning out significantly better.
Yeah. Last call for questions, if anyone would like to ask. Yes.
So some of the VCs who were on the panel earlier were talking about opportunities that they saw in the marketplace. I was wondering if you guys could make a minute or something, please share some interesting opportunities.
Sorry. My question was, do you see any interesting opportunities right now in the cyber marketplace, and would you like to share them with us?
What do we like in terms of what we're seeing?
Yeah. So what are you as investors? What are you looking for? If you had to have like your kind of ideal startup in your mind right now, like what might that look like in terms of trends?
Yeah, it's borderline trade secret, right?
Unless you allow us to talk about portfolio companies, that would be sort of self-serving. I'm not sure I want to do that, but I can
Everything
use
in their
examples.
portfolio.
Emerging trends that you're seeing.
Yeah.
I think, Richard, you made a good reference to frame it earlier, which is you talked about evolutionary cycles, right? Those where we're seeing the next gens of the world. And I actually find those quite compelling as well. So there's part of me that's looking at that and saying, where are we due for a next gen? And where do we think that there's some interesting opportunity? And that could be anything from, SIM to managed security services and things like that. And then there's, stuff that's way off out in the distance. Like what's the future of quantum encryption? And you've got to sort of split your time, I think, between some of these long bets to say, where do we really think the market is headed on this stuff versus the ones that are sort of straight in front of you that are solving today's problems related to the fact that basic cyber hygiene is still really important. And that's echoed by every CISO you talk to.
Mm-hmm. Absolutely. I think, cyber hygiene as a theme, those overarching themes in the segment where you're looking at cyber posture, quantifying that. We were early investors in Security Scorecard, which is a cybersecurity risk rating platform. So, with that company and maybe one or two others, they built their own spend bucket that now has grown exponentially and, become a meaningful aspect of cybersecurity. Looking for those types of overarching themes that sort of allow you to build a larger size company is, the big challenge. But again, that's part of it. I think the replatforming of cybersecurity in terms of next gen is compelling. I mean, we're invested in next gen SIM players, SOAR, which I kind of categorize as an adjunct to SIM. All that interesting and, compelling from a returns perspective and investment perspective.
So I'll throw out a couple things. I like cyber hygiene as well. Anything that addresses the people aspect. I think AT&T has that 92% of breaches are a result of human failure, not technology failure.
Yep.
I like risk quantification, although I like another one better. But that's okay. I think I love Security Scorecard as well. I think cyber physical security is interesting, and everything from critical infrastructure, where we've got a toe in the water in that space, to airborne platforms, UAS technology, automotive. I think there's a lot of opportunity there, a lot of runway. I think SOAR is interesting, and I think I don't see that as an immediate consolidation. I think we're early days. I think it's got some legs in it. So that's some of the things I see and that we've looked at.
One more thing. I think the biggest underfunded segment in cybersecurity is the consumer. So if you look at 5 to 10 years, the connected home, and you look at it as sort of an SMB mini network. It already is in many cases, but at scale. And then you look at sort of delivery of product, drones, and everything that is forecasted to come out, whether it's true or not, even to a 10th degree if it is true. You're talking about a home that needs additional layers of security beyond what we're even thinking about today. So, the classic antivirus that you purchased years ago is kind of what people still have today. Maybe they have a little bit more protection. That's going to change. There are going to be hacks that are monetizable by the bad guys that will demonstrate that you'll need another layer of technology. I think companies that are positioned well to do that are some of the legacy providers who have that massive base of users today. 500 million, 800 million. Those are big bases of users where if you add on the type of products that address that problem, you can win big. So some of those are undervalued in the market. That's an attractive space, I think.
So there you go, the next frontier, protecting our smart refrigerators and Amazon Alexas. Well, that's all the time we have. Thank you so much for listening, and thank you to our panelists for being here and sharing your insights.